welcome to M-Advisor Office Hours. I'm Paul Morton. Today we're talking about capital gains. A capital gain is the growth proceeds resulting from an investment appreciating. Realized capital gains means the growth is available for use. You can spend it or you can reinvest it, but it's available to you. Unrealized capital gains means the growth or the appreciation of the investment is not yet available. Only realized capital gains are taxable. Here's an example. ABC stock was purchased on January 3rd, 2023 for $100 a share. It was sold on March 8th, 2024 for $150. So it was purchased at $100 and the stock grew to $150. It is not realized until the stock is sold, because then that individual had that additional $50 to then reinvest or spend. It was available to them. So the $50 is the realized capital gain when the stock is sold. The $100 is the original investment, and that is money returned to you. So it is not taxable. So the $50 is the realized appreciation, and that would be a taxable amount. In taxation on long-term, on total capital gains, there are two types: short-term capital gains and long-term capital gains. Short-term capital gains means the capital gain is realized in 1 year or less, and it's taxable as ordinary income. Long-term capital gains means the capital gain is realized or available to you in greater than 1 year. So at least 1 year and a day. And the tax rate is a discounted tax rate, and it's dependent on your total taxable income, but the tax rate can be anywhere from 0, 15%, or 20%. So as a side note, capital losses can offset capital gains. Here's an example of long-term and short-term capital gains. So ABC stock, this is the same example here, was purchased on January 2nd, 2023 for $100 a share. It grew to $150 on March 8th, 2024 and was sold. The $50 is the realized capital gain. The $100 was the original investment returned to the investor. So the long-term capital gains tax in this example, the income tax rate is 32% and the capital gains tax rate is 15%. The long-term capital gains tax is 15% times $50 or $7.50. So on that $50 growth, on that gain, $7.50 is taxable. And the custodian or the investment company would send that individual a 1099 to file with their taxes. Example number 2, XYZ stock was purchased on the same day, January 2nd, 2023 for $100. And it grew to $150 and was sold on December 15th, 2023. So it was sold quite a bit earlier. Since this is 1 year or less, the $50 is a realized capital gain, and it would be classified as a short-term capital gain since it was 1 year or less. And the capital gains tax rate for short-term capital gains is the same as your highest income tax bracket. So in this case, this individual's income tax rate is 32%. So we take 32% times the realized capital gain of $50, and you end with a capital gains tax of $16. So note, both of these transactions were purchased for the same amount, $100. They sold for the same amount with the same profit of $50, yet there were very different tax consequences. In short and in summary, that is capital gains.